You were listening here at the desk for the duration of Powell's comments. Right. I think some of the headlines that stood out to me finally got some clarity on the size. That balance sheet we'll get to, he said, about $3.5 trillion. So $600 billion or so to sell until they're done. Also said no need to make a move on interest rates one way or another. Markets seem to be suggesting that a cut is probably the most likely next move for them.
They are talking about a cut, and Brian Cheung asked him specifically, what would it take for the FOMC to move interest rates higher or lower, because they talked about the headwinds, the global slowdown. You heard the Fed chair say Germany's not in recession, although we're getting indications from Germany that, well, maybe they're about to go there, that we're not in threat of going into recession. So Brian asked a very important question, and he dodged it. He didn't really say it. But when you talk about the balance sheet, what investors might want to look at in regards to that is they're going to end this in September, right? But then he talks about keep an eye on reserve balances, because as reserve balances start to fall, the Fed may then pick up the resumption of the purchases of Treasury notes. And that's going to be a signal perhaps that investors will start determining how they're going to play that. But it seems more or less the Fed chair did not answer the key question that Brian asked, which is, you're going to hold, and you're not telling us how long you intend to hold. Right,
and the balance sheet is already enough in the weeds, the details of that, but I think what you're also edging at is, how they would, what the composition of that balance sheet would look like, right? There's been a suggestion that perhaps they'd get rid of all their mortgage-backed securities, they would go all with bills, where they want to hold a couple long bonds, but that, of course, is how they want to move the curve. And an interesting dynamic happening today on the Treasury curve. We see a steepening out on the long end right now. And 3-month 10-year is actually a little bit flatter, because obviously the 3-month, 6-month, those bills are going to be higher if Fed funds is at 238, 239, wherever it's settling right now. So, Seana, looking at the market reaction, anything standing out to you? Because right now I'm just surprised the extent to which the market has now said, great, that's it.
Yeah,
it was. No, we don't need to price in any more rate hikes, especially the longer end of the curve.
Well, I think this was exactly what the market wanted to hear, and I think it was also they might have been a little bit surprised just in terms of how dovish the Fed was. The fact that they don't see any rate hikes this year, just one looking ahead to 2020. I don't know if a lot of investors out there were necessarily thinking that the Fed would actually follow through and say that today. But Myles, what you were saying in regards to the composition here of the balance sheet, they were saying that. Fed Chair Jerome Powell said that the long-run composition of the Fed balance sheet will be decided at a future meeting. So like you guys were saying, he was dodging a lot of those key important questions here in terms of the future. Also, one of the things that stuck out to me in his press conference was when he talked about retail sales, some of the weaker than expected economic data that we have gotten out recently. And he was saying that it was a surprise, also that it was, quote, inconsistent with other data readings, but that he said that the Fed is not dismissing it in any way. But then he did couch that a little bit with the fact that he's not too concerned given the underlying fundamentals of the economy right now. So he did kind of tread that balance that we were, I think, almost expecting from the chairman today, and just saying that, hey, that wasn't that strong of a number, but also, on the other hand, we're not too concerned about it.
Right. So he did mention retail sales, but he also did mention the labor market, saying that it's still strong. And like you said, he says that the underlying economic fundamentals still look strong, though not very strong like they did last year. And yeah.
But there was a question during the presser that within the course of not even 4 months, we've gone from an expectation of a full point interest rate increase the other direction. They're seeing something that's upsetting them. And you talk about the 30-year and it's spiking up in the yield. There was a guest on with Jackie during the ticker who pointed out at the end of these cycles, you get that spike before a recession. So I don't know if the Fed chair would ever answer the question, what are you not telling us? Right. But what are they not telling us? Because they see something that's upsetting them.
Right. And Catherine Rivera, who was on with you guys earlier on the ticker, she was like, hey, no recession in 2019. Pretty certain that it's not going to happen. But the other guest was totally on the other.
Bingo.
Exactly. It was just interesting comments.
And I think something we sometimes forget, right? The Fed knows where it sits in this, right? The Fed raises interest rates, puts more pressure on the economy. The economy gets closer to recession. So people like to act like the Fed is so stupid. They've never thought about this. But this is what the Fed thinks about. And I think part of what Powell is saying is we believe we are an essential part of keeping this cycle going. And that is what we plan to do, at least for the foreseeable future.